Hello again, friends. Many of you have surely heard the famous quote by Benjamin Graham: in the short run, the market is a voting machine, but in the long run, it is a weighing machine. I think the voting has slowly started to shift to weighing throughout this year, starting at the beginning of the year. But looking at the recent bear market rally in Standard & Poor's 500, in Nasdaq during the recent month, I think we have some voting still left to do, apparently. Predicting the market bottoms is impossible, and I do mean it is impossible, but if you held a gun to my head and required me to answer, I would still say that we haven't seen the market bottom yet, and we have even quite significant way to go more down still. Why? Let's discuss it next. Here on the screen you can see a tweet posted by Michael Arue that I came across on Twitter, and here you can see the ARK versus .com bubble, the stock chart. There you have the Nasdaq between 98 and 2003, and ARK Innovation Fund between 2016 and present. ARK is the orange one and the blue one is Nasdaq, and as you can see, they are quite similar. We can see the big tick up after the corona pandemic here, then a decline, then a bear market rally again up, then we go down again, little bit of short rallies there, and then when we reach the bottom this far, we see with the yellow arrow I have marked there, a little bit going up. And this has now happened with the ARK. I predict it has gone up with other technology, high-tech stocks recently. So the orange line can be even continued to follow this blue line now with the yellow arrow up there. But what will happen next? That is my question with the pink arrow there, because what happened with Nasdaq obviously was that we went down again more. So I just thought this was a fun picture to show you how the history, if it doesn't repeat itself, it definitely rhymes sometimes, as in this case. As said, we cannot know where that line of ARK will move next, but it has been remarkably similar to Nasdaq in the dot-com bubble that happened in 2000s. Obviously, nobody should ever make judgments on what's going to happen in the future based on this kind of indicator. This was just for entertainment purposes, obviously. Most likely it's a random coincidence, nothing more than that. Remains to be seen what happens next. But the thing I wanted to highlight with that picture that has become evident recently is that when you have a bear market, you will have lots of rallies up. And that has hold true also this year. We have had these bear market rallies, and we have had already a couple of them, I think, and they are normal in a downward trend to have. So, nice thing to note there. Nevertheless, do not try to invest by trying to guess where the bottom is. Timing the bottom is not advisable. It doesn't work. Nobody can do it. So I'm gonna say again what I've said in my previous videos. Instead of watching these kind of broad indicators, focus on your micro environment, focus on your individual companies, on your watch list. Learn from them, always make their valuations better. And I'm pretty sure you will do more fine with that, at least for me myself. That's way more easier than watching some macro developments happening. I'm gonna keep my focus on my watch list, stocks on my watch list, and learn more from them all the time. Continue trusting on my valuations. Okay, this was a fun chart. I wanted to just show you how history sometimes can rhyme with the present. Next up, I want to pull up here on the screen another Twitter account that I follow myself, the Kobeissi letter, and disclosure here, I haven't checked this data, double checked that this data is correct, but if you can sometimes trust the good people on Twitter, I think I have no reason to suspect why this data wasn't right. So haven't double checked it, please remember that, but nevertheless, let's check it out. The Go-Base letter wrote on 12th of August that if stocks bottomed now during the recent week, it would be first bear market with two relief rallies since 73. Okay, well, possible. A 12% higher low than the average bear market. Okay, you have the average bear market, how much we go down on average, 12% higher, doesn't sound too special to me at least. First bear market to bottom without VIX at 45 plus. So VIX index is the volatility measure of the market, and this has come across to me quite a lot when I have been checking finance, Twitter, checking sources online. Many people tend to talk about this VIX indicator in relation to finding the bottom of this bear market, but as said already in the beginning of this video, I don't put much value on this since it has been said now 100 times, and I will say it 100 times more. Timing the market does not work, nobody can do it. If somebody claims that he or she can do it, I think he or she can do it once, have good luck and succeed once, but won't succeed second time. That's evident to me. Then we have number 4, a low 3 months sooner than the average bear market. Okay. Again, not too special in my opinion. They conclude that a bottom here would make history, surely, but then again, every big market crash we have had ever, didn't they all make history at the time and were something unseen always? So yeah, these are fun things to check where we are at with the things mentioned in this tweet, but then again, just an example for me that I wouldn't put too much weight or value in these in this kind of indicators predicting that we can go down even more. We might go down. This has obviously lots to do with the interest rates and how the Fed is gonna play with them, what the Fed will do with them. As Warren Buffett has noted, as many of you surely know, interest rates work to stocks like gravity to matter. So when interest rates go up, stocks go down. When interest rates go down, stocks go up. That's just how it goes. And yeah, we all know inflation is now 8.5% at the moment when it should be 2 to 3%, so it's definitely too high. That would imply that interest rates need to be heightened to get the inflation in control, to get it back to 2 and 3%. Then again, my economic skills will end here because I don't know what kind of unwritten rule it is that, or written rule, whatever rule it is, that inflation must be 2 to 3%. Why can it be 3 to 5%? I have no clue. I don't know. Maybe it can be. It surely can be. I feel myself that it's only a kind of a decision to make. Like, what do you want to sacrifice? Do you want to sacrifice the stocks, or do you want to sacrifice your dollar, your currency? I don't know. I'm not an expert on that, but one thing I've learned coming up to this age, that you should be prepared for everything and anything can happen, so better keep that in mind always. Okay, let's move on. Why did I want to do this kind of fun video, not too scientific video with you? Well, I have a special stock that I have been analyzing myself. I have made a valuation on it, and it's the most talked stock among my friend circle, at least. Obviously already. Make a guess now, what stock do you think I'm talking about next? Yeah, you got it right, it's Tesla. So I have had this fun conspiracy theory that is non-scientific by any matter, but I'm gonna still say it to you and present it to you guys. So Tesla, in my opinion, is the most loved stock among tech investors. It has been for years. Can Tesla be the canary in the coal mine for us to see when that famous bottom would actually come? Could Tesla be the sign of it? I don't know, but as said, this is a fun theory I've had in my mind for some time. I believe we need to see Tesla having a major decline in their stock price before the so-called bottom can have happened. So this is my fun prediction. This is my fun guess. Nothing scientific about this. I want to highlight that. No scientific video. This is entertainment video. Please keep that in mind. Here on the screen, I'm gonna put now the table I did. Here you can see the table, and as we can see, I picked there a couple of companies, couple of ETFs, and Bitcoin, and we can see year-to-date performance, 1-year performance, and 5-year slash IPO compared to IPO price performance, so initial public offering when the stock listed to some exchange. So as you can see, I picked here Tesla, Spotify, and Meta because I have my own valuations on all of those three. Then I picked one other greatly liked high-tech investor stock, Nvidia, also Netflix, which has have had big price movements recently, also pretty hyped stock during the last 5 years. Then we have Roundhill Meme ETF, which obviously, as the name sounds, is an ETF made of meme stocks. Okay, I guess you can sell people anything people want to buy, but this kind of ETFs existing in the world tell me a story of what is the investing community nowadays focusing at. This is kind of a bonkers thing, crazy thing for me that this kind of thing even exists, and many people apparently are buying this. So yeah, you make your own opinion on that. Okay, moving on. Let's check what is it there in the what was it? Roundhill Meme ETF. We have there, and you can see now on the screen, their biggest holdings. AMC, Coinbase, Marathon Digital, I can't remember what they did. Peloton, that was the bicycle app, interactive bike you have in your home. Roku, MicroStrategy, Carnival Corp. Was Carnival now the cruise line? Maybe. GameStop, everybody knows GameStop. Short Squeeze and stuff. Robinhood, that's the trading app, trading platform, and Shopify, online shopping. So yeah, you can check yourselves what these do. I don't even remember what all of these Coinbase obviously has to do with cryptos. You can go and check what these do, but basically I'm not sure how Roundhill has chosen these stocks. If I need to guess, these are maybe the most talked stocks on Reddit or on internet or something like that. And they made an ETF out of it, so now you know what it is. Then after that we have ARK Innovation ETF, which I have referenced also before in my videos. Currently their biggest holdings are Tesla, Zoom, here you can see them also on the screen, Tesla, Zoom, Roku, Block, Teladoc, Unity Software, CRISPR Therapeutics, UiPath, Exact Sciences, and Beam Therapeutics. All growth tech stocks, I would claim, most of them, without knowing them too much. You know in what kind of things Cathy Wood invests in ARK Innovation ETF, so you get the idea for sure. And finally, Bitcoin on the table. And let's move now back to the table. Now this is why I made the table. You can see everybody else. Let's have a look at the 1-year performance first. Tesla is the only one on the green side. Everybody else on the red side. So among all these high growth tech stocks that I have ever come across, I'm always surprised that whenever when everybody started going downhill during this year, the only one that really didn't even move down that much was Tesla. So that now you understand what I mean with the canary in the coal mine. I think all the Tesla's peers, and again this is non-scientific, I'm just telling you how I see the world myself, and what I think is that you can see many stocks like, for example, Tesla, Spotify, even Meta, even Netflix, even Nvidia, that I would imagine many people who have Tesla in their portfolios also have some other of these names, or then some names from the meme ETF or the ARK Innovation ETF or Bitcoin, and everything else has basically crashed. Let's take the last month's a little bit rally which we had away from here, but basically you can say that everything else has crashed in these people's portfolios except Tesla. And I kind of just see that Tesla is the one that has the most faith among this high growth tech investor community we have. Tesla is the crown jewel. Tesla is the last fortress. so to speak. But what will happen next? That is my question. My fun theory, my fun prediction, guess that is completely non-scientific, is that we can start talking about the market bottom once we see Tesla bleeding a little bit. And why should Tesla bleed? Let's move to the section. Let's jump to the column there, which I have written how much the stock should fall for 10% annual return. As I said, I have only made valuations myself this year recently on 3 of these stocks. I feel Tesla stock price where it is sitting at the moment should fall another 60% for me to look at it as an investment to justify its value. Spotify, I feel, is 27% overvalued. Meta, a really difficult case. I have made video here on YouTube on my channel on Meta stock analysis. Go and check that out. Difficult stock to evaluate, but there is many things there is many things to like and few things not to like in Meta. But I believe with today's price, Meta is fairly valued, let's say so. There are many risks, there is volatility ahead, but volatility makes also opportunities come. So if Meta stock price plummets down, it might be a great buy. Much of that depends obviously on the metaverse they are doing. Results of metaverse will be long in the future. What will it be, or will it be anything? I believe that pretty much determines was Meta a good investment or not. That's the wild bet they are having, the thing they are investing a lot. But I also bought Meta, and I have Meta in my portfolio, small position of it. But I bought Meta because of their old business, the social media platforms. I feel that they were now fairly, I'm not going to say too much undervalued, but I still believe they are fairly valued. So I will get those old businesses with this stock price, and anything extra with metaverse would be a huge upside for the stock, let's say so. But as said, the most overvalued stock I have been analyzing, in my opinion, at least out of these 3, is Tesla by a big margin. So that relates the stock price movement there of 1 year performance, as you can see, the only one on the green side and the only one that hasn't had the crash all Tesla's sisters and brothers stocks already had, I would say. And yeah, that is the this is the basis for my canary in the coal mine theory here. And what else you can find? This nice table which you have been looking at now, which I have done. You can see that obviously price to earnings ratio is, with high growth companies, probably not the most relevant metric, but still, just quick notes that Tesla traditionally used price to earnings really high still for Tesla. Spotify is loss-making, and if you compare those two to Meta's PE ratio of 14.71, they are in completely different world, I would say. And there you have also Nvidia and Netflix. Maybe one thing more from this table I didn't address was the 5-year performance. Obviously, let's pick few. Or remember, it's 5-year performance or IPO price. So if you bought Spotify at IPO, you haven't made any money. If you bought Tesla 5 years ago, you have made absolutely great returns. Great buy was Tesla back then. Meta, not much happening during 5 years. Nvidia, great buy, huge returns. Netflix still up pretty significantly from five years ago. Well, you might already guess that with meme stocks you don't make much money, so red there the whole thing. ARK Innovation ETF, as I said in my Tesla valuation video, you can go that. I have the Tesla valuation video also on Arctic Money channel. Go and check it out. Cathy Wood and me have differing opinions on Tesla's valuation. What will Tesla stock be in 2026? So you go watch that and make up your own mind. But as you can see, the last 5 years of returns from ARK Innovation ETF, 8%. On the plus side still, but not great returns, pretty bad returns in the bull market we have been having before this year. So not a good investment. And finally, we have their Bitcoin. We have obviously great returns with Bitcoin. If you bought Bitcoin 5 years ago, not so great if you bought last December, as with same case as with many of these stocks. Okay, now when you're looking at this table, you are telling me that, well, Christian, you were an idiot when you didn't buy Tesla, Nvidia, and Bitcoin 5 years ago. Obviously, I was an idiot, and if someone watching this did exactly that, I congratulate you. Absolutely great performance. But one thing I would like to ask you, if you had Tesla, Bitcoin, and Nvidia 5 years ago, and you have been holding these things until this day, let me ask you, what else did you have in your portfolio? Because if you had only these three stocks, or two stocks and Bitcoin, you are something special, I would say. But for every Tesla, for every Bitcoin, for every Nvidia out there, I believe there is a huge number of similar companies which had great expectations that turned out in the end to be nothing and probably went bankrupt. So that's the high growth tech investor game. Don't do it myself. I'm not saying I couldn't invest in some unprofitable tech business if I really get a conviction on some, but my problem with them usually has been that they are so high-flying stuff that are not inside my circle of competence, difficult for me to understand them. So that already says I better invest my money in something I understand more. So yeah. Hope you get what I mean. Like when you hear these stories of somebody making huge money with investing in Tesla 5 years ago, first I would like to ask, what else did you buy, or did you really buy just Tesla stock? If you did, congratulations. But what are you going to do next? What is the next Tesla? What is the next Bitcoin? What is the next Nvidia? And let's check it out if you can hit that target twice. I believe that will be quite difficult for you. That's why I stick to value investing myself. Alright, let's move on now. So, I would like to hear, how do you approach all of this? Even though predicting the bottom is impossible, if you would need to guess, where would you guess we are at the moment? Have we seen the bottom yet, or is the worst still to come? Do you use maybe some macro indicators that dictate when you invest in the market and when not yourself? As said, me, obviously I pay attention to some, but not too much. I would say it's nice to be aware of macro, but most of your focus should be in micro, in the actual companies you're going to invest in. Other main point I just wanted to highlight with this video is that market timing is impossible. So basically all the talk I've been having here is mostly entertainment. I don't try to time the market. I don't do that. Statistics have shown neither should you, because it's impossible to do it 100% out of time correctly, and once you don't do it 100% out of time correctly, you will have big misses that will in the long run lead to very low profits, lower profits than what you would have achieved with dollar cost averaging, with investing in steady intervals all the time to the market. But yeah, as said, this video was now entertainment, non-scientific one. Don't take this one too seriously, and let's see what will happen. This was my canary in the coal mine theory for Tesla stock, and I'm not gonna be the market expert if I nail this one correctly. It's just fun coincidence. But I just wanted to share this fun thing with you guys, because it has been going through my mind already, that how come every stock I consider to be Tesla's brother or sister, they have all crashed, but Tesla is still fighting on. So maybe I'm wrong with the Tesla valuation myself. Maybe Tesla stock isn't overvalued. It can be so. It can be so, then I'm wrong. I don't have my money in Tesla, but I try to make the valuation as well as I could. If it's wrong, then I'm wrong. I'm not going to be 100% time correct all the time, but I like to invest in stocks where the downside is limited. I'm sure this won't go down much, and the upside is huge. With Tesla, the case is that the upside is huge with everything they are doing, but the downside, I claim, is also huge with Tesla stock at the price levels it is sitting today. So let's see. Only future will tell if the canary in the coal mine theory hold through, and 2026 we will know who was right, Cathie Wood or me, with Tesla stock price in 2026. Go and watch that video after this one if you're more interested in that one. Thank you for watching this video. See you in the next video. Bye bye.